Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to take a look at the USE minis and see how they unfolded yesterday, which was Monday the 26th of March, and it was actually quite an interesting day yesterday. As usual, I like to start with the 15-minute charts and look at our decision point areas. And as you can see here, this is on the Russell Index. We had DP support here a few days ago, which caught the low beautifully, and then the market has rallied up. I'll just put the pivots back on here. Just bear with me for a second. We can see the pivots now. And yesterday we were rallying up into decision point resistance that was placed on the chart there before the market opened. NQ, again, something very similar. We had a nice DP low here. Markets rallied off that. Early in the trading yesterday, the market got up into our decision point resistance, but then powered through that later on the day. To remember that decision point is not only a resistance or support area, it's decision point for a reason. It's an area where the market makes a decision. And normally when we have a market go through a decision point like it has here, the market normally makes just a little wiggle here while the market's making that decision. We can use that for a trend continuation trade setup. That's an advanced trade setup that I won't be talking about in this video. Same for the YM. We had a decision point resistance coming in here. Market backed off a bit before rallying higher, and same situation for the ES. We had decision point resistance here. Market backed down, but then powered up to then go to the second resistance area. So I want to look at the YM because that's probably the clearest picture, in that we had a decision point resistance coming in here. Remember, these are placed on the chart before the market even gets there. So if I go back to before the market even opened yesterday, which was here, I can come back to a prior important pivot, put the decision point on. You can see it's on the chart there before the market even opens. So as the market opened and came up into this area, you can see we're at resistance. Now normally what we teach is when we have a market in a 15-minute resistance area, we're then looking for short trades. So I'll go to the YM and have a look what unfolded. Well, we didn't get any short trades. We had a buy setup here that would have been a valid standard automatic trade setup, would have been stopped out for a -1 hour loss. Had a TS4 sell here, but against blue STF. But I want to zoom in a bit closer, because there was a very interesting trade here. If I go down to the 1-minute chart, and I know quite a few of you do this. Now bear in mind, we were looking at this area here being our 15-minute resistance. Remember that. We then had an initial decline off that high. Okay. Now what interested me was the initial rally, and the initial correction. So we had initial decline coming off the 15-minute high. We then had a rally up here, and you see we had a history triangle for an automatic setup. So if I place the analysis on here, you can see this gave us a TS4 sell. Now for those of you who are experienced with MTPredictor, you'll know that when we have an initial decline, an initial rally, we assume that this is going to be a wave 2 correction. Okay, if I put the major elliott waves on, it didn't actually do anything there because of the swings, but we're assuming this is going to be a wave 2. So what we're looking for is we're then looking to project down a wave 3 target. So if I put the analysis on again, we're not looking to come out at this first target here. We're actually excuse me there, I just sneezed. We're looking to come out at the typical wave 3 WPT. So for this we use our WPT tool to place our wave 3 target, which will be down wave 3 target, on our chart. So we click on the start of the sequence, the end of wave 1, then the end of wave 2, and you can see here this would be our typical wave 3 WPT target. So this would actually have been our target where we're actually looking to come out of this particular trade, and as you can see it would have resulted in a nice 5.3 hour profit. And this is actually what we define as our holy grail trade setup, because this ABC correction here will be going into a wave 2. We're then looking for the initial wave 3 down. And also, which gave you added weight here, and I thought this was absolutely amazing, is as this wave 3 came down, for those of you who are Elliott wave experts, you'll know that wave 3 typically subdivides into a minor ABC pattern. So if I right mouse click at the bottom here, I do Elliott wave intermediate, can you see how this is exactly what the YM did? It went 1, 2, 3, 4, 5, right into the minimum wave 5 WPT. And that's where the actual low came in, right at that minimum wave 5 WPT. So here we had the coincidence of the end, i.e. a trend termination of this 5-wave pattern down here, which was also a wave 3 swing down off what would be a wave 2 high here. So this was the ideal place to take profit on this particular trade. So as you can see, a nice 5.3R profit. Okay, that's all well and good, but now we knew that we were looking for a low here, and this was around the 12:30 zone. Ideally it would be a wave 3 low, but the point being is it was a low coming in here. It's worth skipping around a couple of the other markets and having a look what else there was. And the market that interested me was on a ES chart, and then if I go out to a 5-minute chart on the ES, if I load that, just take that analysis off, that's what I had on from earlier. You can see on the 5-minute chart, yes, we had a TS2 buy earlier, but that's not where I'm looking. Remember I said on the YM chart we were looking for a low around the 12:30 zone. So at 12:40 here we actually had a buy set up. Now this came in as our history triangle because if I just put the pivots on, you can see there's our ABC correction because we had a double bottom coming into that low. Can you see that? If I zoom in, it's actually a double bottom. That's why there was a history triangle. So let's place the analysis on and see what we got. Well, we had a trade that would have been entered at this level. Because it was a double bottom, it wouldn't have been stopped out. The stop trigger was at 1403, and the low of that bar there was 1403.25, so it wouldn't have been stopped out. This was also a perfectly valid and standard automatic trade setup because the STF was blue. The market then rallied very nicely up into the first target for a lovely 7.3R profit. So the only issue with this one is that we were against our our 15-minute decision point that unfolded earlier in the day. So the only kind of trader that would have been able to consider this particular long trade would have been a more aggressive advanced trader that would have also spotted the low coming in here on the 1-minute chart. So that's why it could have been a good trade to consider, because you'd have done your holy grail analysis on your YM chart, on this 1-minute chart. You'd have then been coming out at around the 12:30, and you'd be knowing that this was an area where low was to come in. So can you see now how this TS3 buy setup would have actually been a good place to come in because a low was actually anticipated. If you were slightly worried about this being against the 15-minute trend, you could have been slightly more aggressive with your trade management, and once the market got beyond the 100% initial risk, which it did here, you could have bought your stop to break even, and that wouldn't have been stopped out and still allowed the market to go up to new highs. So this has been a good example here of not only using the 15-minute charts to gauge our initial resistance area, but also showing that sometimes the markets will actually just make a minor correction at these larger degree support and resistance zones and then carry on back in the original direction. You remember, these are decision points. They are areas where the market will make a decision, but normally, as we can see here, when this decision is made, you normally will get a little wiggle. As the market is making the decision, the professionals are getting their trades in the direction they want before the market then carries up to new highs or lows, or in this case new highs. So even though we are looking for short trades here, the advanced traders among you should bear in the back of your mind, if there is good reason to then want to take a long trade against this, as we had in the ES, then just be slightly more aggressive with your trade management. And the reason to take it in this particular example was because our holy grail short trade was coming out at a lovely area where we consider a low to come in and this particular downtrend to end. So it just tied in very nicely with taking profits on this holy grail short to then to say, well, okay, now we want to take a TS3 long on the 5-minute ES chart to then take advantage of as the market rallied. So a good day yesterday for both the YM and the ES, but for different reasons, for different trade setups. But overall, a good day whether you took the short trade on the YM or this lovely TS3 buy setup on the ES. And as a PS to this video, if we look at the NinjaTrader chart, we get exactly the same setup here. Here's our history triangle. So if I put my analysis on here, you can see that we get exactly the same setup on this ES 5-minute chart going up to the high there for a lovely 5.3 hour profit. So same setup whether you're using the RT add-ons for NinjaTrader or whether you're using MTPredictor 6.5 or whether, as in this example here, I'm using the new beta of the new MTPredictor version 7. So it's all the same no matter which version of MTPredictor you're using.